Hi class. In this problem we are going to work Chapter 4, E1A. Now if you'll look at your book, Chapter 4 E1A, all the income statement information is given to you in a worksheet. Okay, basically they've taken the trial balance, which lists all the debits and credits for all the accounts, and they have just pulled out the income statement accounts, the revenue and expense, and they've shown it to you in a nice worksheet format where they have subtotaled the total expenses for you. They've also shown the net income, so it'll be really easy to make sure that we've done this right. They also tell us, they don't give us any information about withdrawals. So the only closing entries, because they've not given us any information about withdrawals, apparently there weren't any withdrawals, the only closing entries we need to make are about revenue and expense. Okay? So E1A, the first thing I'm going to do is I am going to close revenue. So I am going to debit commission revenue. For $25,620, and I am going to credit the income summary. Okay. Going to make myself a little general ledger account over here for the income summary, and go ahead and post that credit. Now, the next thing I'm going to do is I'm going to close all the expenses. Well, the expenses have normal debit balances, so I need to credit them to close them. They've told me that my total expenses are $15,830, so I can very easily, I know some of you, it feels better because we're left to right readers. I know it feels better to make the debits first. It feels weird when you don't. In this situation, we can make the debit first. Okay? So, income summary. $15,830. See where I got that? That's the total of all the expenses. And then I'm going to credit wages expense. I'm going to credit rent expense. Credit supplies expense. Credit insurance expense. Credit depreciation expense. Okay, that should be it. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, so I'm going to post this debit to the income summary over here. Sure enough, the difference in our account right now is a $9,790 credit, which is shown, if you look at the problem, that's what they tell you net income is. So now we need to close out net income to the capital account. In other words, we need to increase the capital account for the net income and zero out this income summary. So I'm going to debit the income summary for $97.90 and credit the Lewis Hamilton capital account, or you can just call it owner capital. I know what you mean. Okay, now let's go on to look at E3A. And E3A is a little trickier because they are asking you trying to figure out what I want to do here. Okay, E3A is something that you definitely need to be able to do. And that is where you have just been given an alphabetical list of accounts and their balances. And you need to be able to put this alphabetical list of accounts and their balances into a trial balance, assuming that all the accounts have their normal balance, meaning assets have debits, liabilities have credits, equity has credits, revenue has credits, expenses have debits. Okay? So, what we're going to do is we are going to start with the account and a column for debit and a column for credit. Again, this is problem chapter 4, E3A. This is a good overview to get you ready for your big problem that you're going to have to do to show me that you can put chapters 1 through 4 together. Okay, so when we do a trial balance, we need to move from, I'm going to make a list over here for you so you can refer to it to look at it. You start with assets, you move to liabilities, you move to equity, then revenue, then expenses. So we're going to look for all the asset accounts first in this list. Then we're going to look for the liabilities, then the equity, then the revenue, then the expenses. Okay, and we're going to start with the most liquid of the assets. So I'm looking through this list. Okay, cash. We always start with cash. It is our most liquid asset. Okay, so I'm going to start with cash, 15,270. Okay, the next thing I see is accounts receivable. Another very liquid asset because we will collect it pretty soon, hopefully. Okay, cash is gone. Accounts receivable. I see prepaid insurance and supplies. Remember, prepaid insurance is an asset because you paid it, but it benefits you into the future. Supplies, 1650. I see office equipment. $31,020. I see accumulated depreciation on the office equipment, which is $2,700. It has a credit balance, but it stays up with assets. Okay, let's take a scan through here and see if you see any other assets. I don't. Okay, so moving to liabilities, I see accounts payable. That is all I see for liabilities. So I need to move to equity. I see IBEL capital and IBEL withdrawals. Okay. Notice that withdrawals, don't forget, they have a debit balance. They are against your capital. You're pulling your capital out of the company when you write yourself checks. Okay? That's it for equity. These are both equity accounts, even though we're only capital will show on the financial statements because we'll close the withdrawals out to it. Okay, the next thing I want is revenue, and I am scanning. I see revenue from cleaning. Revenue from cleaning, $115,800. Is that the only revenue account we have? You have to double check. Some companies have more than one line of business. Okay, now I need to pull off expenses. So I'm starting back up at the top. I see advertising expense. $3,600. I see rent expense. $14,400. I see wages expense. $72,000. I believe I've picked all these up. Let me get the solution. If we've done this right, this thing is going to balance. The debits and the credits will be the same amount. Let's get a check figure. Let's get a check figure here. E3A. Okay, I'm going to double check my numbers here. Yep, okay, so 210, 600. Yes, we have included everything. Okay, looks great. Okay, so that's how you work your way through making a trial balance. Let's see, we don't have much time left on this video. I'll go ahead and close this one now. Thank you.